How's everybody doing today? Welcome back to the channel. So today I'm going to show you guys how to actually be picking stocks, right? So let's say you're interested in a stock and obviously you don't want to just go in and just buy it without knowing anything about it. You obviously are probably Googling the stock. For this video, I'm going to say Facebook stock. So let's say you are interested, but you don't know how they're doing. Maybe it's overvalued, maybe it's just a bad stock in general, but you say, oh, they own Instagram. Instagram is doing really well right now. Let me buy some of the stock, but I want to know more information. I see some numbers down here, P ratio. I see a market cap, but I don't know, like, other than that, what makes it good. So this video, I'll explain how to do that research, and I won't tell you like specifically what everything means. You guys can research that on your own, but I'll show you like the steps you should go through to actually make a decision on if you should buy a stock or not. So I'm using Facebook. I personally do have a few shares, and I am holding it for the long term, but I'm just using it as an example. So here we go. This is kind of a chart. I don't know exactly. I would love to credit the person that made this, but I think I saw it on a YouTube channel, and I watch a lot of YouTube, so I can't remember exactly where I got this from, but this is basically a chart that shows you if it's a good buy or not. So you want to go through all these steps. So first you want to actually read the financials, right? Do you fully understand the business model? That's the number one step. Obviously, you want to know the business model, how the company is making money, right? In this case, Facebook, if you know anything about it, obviously advertising is a major one. Any small business out there is advertising on Facebook and Instagram and doing ads around that. That's their main source of revenue. Obviously, they own a lot more things, but that's kind of their business model there. And the next one, obviously, you want to know the 10K and 10Q. Basically, that's the financials around it. You can find that pretty easily. All you have to search is Facebook and then go to 10K, and then usually like whatever company you're searching for, it should be the like first one, investors, should be like an investors URL, and all the financials will come up, and you want to go through them. So the 10K is basically like the earnings and the income balance sheets. You want to go through all of this. If you like what you hear in terms of like the earnings, so if you click on this, there's actually a PDF where you can actually read through this. You definitely, if you're like want to know if a stock is good or not, you want to do your research, guys. Please do not just buy a stock because other people are buying it. This is how you actually want to go through it and make sure you actually are getting all the information you need to make a purchase. So if you go to, once you go through this, see the financials, are they growing? How much are they growing year over year? Do you think their users and their actual expenses, operation and stuff like that are doing better and year over year are improving? Then you can purchase or make a decision accordingly. Next, have you listened to the latest conference call? Obviously right here, if we go back to their investors relations, their earnings call is right here, so you can actually go through their earnings call, and actually there's a webcast. If you click here on most stocks, you can actually listen to it. So I don't want to do that right now, but that's how you go through it. If you did listen to it and you're still like intrigued, next one is do you understand the risk factors? So in this case, obviously Facebook, what if, let's say, TikTok blows up even more and like takes Facebook out of the face of the planet, and Instagram, but overall as Facebook as like a whole company and a few companies within that stock, are they going to go out of business? Is the competition going to run them out? So that's the risk you want to know. You want to make sure you know the risk factors to that stock. Next, you want to know the actual positive net income. Do they have a positive net income? Are they making profit? Are they like small companies that are just losing money? Are they in Uber? Are they like stuff like that that are just losing money? Obviously, I think Facebook is making money, but you want to make sure, go to income statements, go to their balance sheet. Are they negative? Do they have positive net income? Are they making money year over year? Facebook is definitely making money year over year. Next, is the P under 20? That's, I believe, the trailing P. If you go to Facebook, there's obviously a few ways you can look at this. But if you go to their stock, they have a P ratio of 29 or 30. I believe that's their forward P. They're not quite, they're a bit over right now, which is 30. I mean, I'm pretty sure the stock has been up. Yeah, in the last month, it's up 20%. So I believe before that, 30%. I believe like around, even like a few weeks ago, it was around that mark. But if the forward P ratio is under 20, that means it's a good value. Is the forward P under 15? Then that's even a better value, right? Because if you found everything else intriguing about the stock and it's under 15, you want to check that off as well. At the end, if you have more than like 12 checks, or you have most of them checked, a few exceptions, like let's say you're buying a Tesla as a long-term play, the P ratio is obviously going to be over 20, but there's also major upside. If you look at 10, not 10, but like a few years down the road, maybe their company has grown so much. Like if you take a look at an Apple has always actually traded over that because of how just the company runs, but they've like continuously done better. Like the stock continuously goes up, so it doesn't necessarily mean that it's a right away bad investment if it's over 20, but it does mean that it has a potential. The price to earnings ratio may be too high there. Has the business grown revenue in the past 3 years? Have they grown in the last 3 years year over year revenue? If you just look at read through their financials, go through the 2020, 2018, you can just keep going. Every website's obviously going to be a bit different, but this is Facebook's. A lot of them should be fairly similar though. Next, do you expect the company to grow net income in future years? Me personally, I do expect Facebook to go up in net income as more and more businesses stop advertising on TV. I feel like Facebook has a lot of bigger audience. Obviously, Facebook and Instagram has a lot bigger audience. And as soon as those big companies find that out, that TV and stuff and mainstream advertising isn't the way to go, I feel like it's just easily, we can see that happen. They're going to be growing in the next 3 years as everything becomes more digital, as it has been, as the trend has been going on. Next, do you expect the company to grow net income? Okay, no, we just did that. Okay, no, net income grown. So their income grown, and then the next one was to grow their net income. Is this the same thing? I feel like this is a typo, or I'm just missing out on something. But anyways, oh no, this is in future years. So after 3 years, do you expect it to grow after that 3 years? Me personally, yes, I do. But obviously, whatever stock you do, make that decision. I kind of just had a brain fart there. Does the company have more in cash and investments than their debt? So what you want to do for this is go to their balance sheet, right? There's our 10Q right there. Let's go back here. Balance sheet. There you go. I believe only the balance sheet only shows up in the latest Q for this, I believe. Yeah, I don't see the earlier balance sheets. But as you can see like their total assets. This is usually in millions. So this 88 million right here, 88,000 is actually 88,000 to the millionth. So my math is really bad, but I believe it's like 88 billion. If that's right, I think it's 88 billion. And yeah, basically, is there total liabilities and debt over under their assets and basically cash and cash equivalents? And I believe for this one it's not, so you want to tick that off for no. Next up, let's go and see, let me zoom in a little bit. Does the CEO have a track record of growing a company? Obviously, Mark Zuckerberg, I believe he was only known for Facebook, but he's been in that company for a long time. So yes, he's definitely had a track record. Whatever CEO you have, let's say you're on Tesla, Elon Musk, yes, he does. But yeah, that's that. Next, does the company return money to shareholders in the form of a dividend or share buybacks? Facebook, I believe, does not have a dividend. No, they're still like a growth stock. So no, it does not give out dividends, which is fine. Honestly, don't stress about dividends. A lot of growth stocks don't give dividends. And companies that give a lot of dividends, it's likely that the stock won't be growing. So it's kind of like a trade-off, and growing in terms of the cost and price of that share. Next, could you stick money in the stock and feel comfortable that you will be forced to hold it for the next 5 years? This is a big one, because if you're just buying a stock just because you heard someone say it and it goes down, all of a sudden you're like, oh no, I know nothing about this company, but it's going down, I might just sell. No, if you're comfortable in buying that stock right now, unless something major in terms of the structure or any of these things changes, you should definitely feel comfortable holding it if you were forced to for the next 5 years. Facebook, I would definitely be comfortable holding it. In terms of me personally, obviously you guys may disagree, or can be any other stock. Obviously I'm using Facebook as an example. Would you be willing to buy more shares if the stock went down? So if Facebook, for example, went down to 150, would you buy it? If you say yes to that or to your stock, then yes, definitely check that off. And at the end, see how many, if a lot of these got checked off, 90-80% of these, most likely you should be feeling more confident. This is more of a psychological game as well as much as an informational game. If you read this and you're comfortable buying it, then definitely go for it, man. Go for it. And obviously, if any of this actually goes down, short term, long term, you guys can play on. You can buy more shares and you'll just feel more confident in buying that stock. So hopefully you guys did find this video of value. If any stock, just literally just search Tesla financials and it should usually be the first thing. It's fairly easy, but most people do not do this. 90% of the normal average investor does not do this, if not way more. 99% of people do not do this that are the average retail investors. So if you guys are watching this, you're already ahead. So thanks for watching. Hopefully you did enjoy this video. Thanks for watching. Now I'm trying to hit 1,000 subscribers by the end of the year. So if you guys can subscribe, even one of you guys, that'll bring me closer to the goal and that'll be really appreciated. Thanks for watching and I'll see you on the next video.